Hello and welcome. You've tuned into Business Lunch, and let's take it straight across to Siddhartha Lal of Eicher Motors. Our colleague Arif Sherwani caught up with him.
Demand, of course, and the growth story is what it's all about. And to capitalize on that, we're doing basic stuff, right? Which is basically going back to understanding at the brand level, at the inquiry level, at the walk-in level, and at the conversion level, how we operate. And understanding different markets, different segments, different ideas, what's going on. And of course, basically what's happened is that after 8-10 years of phenomenal growth, 40+% compounded growth, which for us was, I mean, I wouldn't have predicted that 10 years ago. Obviously, at some level, what's happened is that some things have caught up, right? Which is a normal case for any company. And at Royal Enfield, what's happened is that I would say we're at the right juxtaposition right now. We're at a point where the first huge phase of growth has sort of petered out a bit. And when I say petered out a bit, of course, there's a bit of reaction because of December sales drop, which hasn't happened in decades for us, whatever, in a decade for us that we've actually gone down. But that's more transitory as far as I'm concerned, because really we're still on a premiumization trend at Royal Enfield, and that's what we're driving.
The perceived slowdown, as you say, like you could have made these numbers look better. But now what has happened, the investor or the market has perceived this to actually be a massive reduction, and that has taken a toll on the share price. So you've seen an erosion over the past year, significant erosion, in fact 25% if I'm correct. Like, are you seeing this as a new cycle in the business? Are you expecting this to be the new normal? Will growth stabilize at this point? Or are you going to hark now to the double-digit growth that you were seeing and as a result try to prop up the share price?
So we don't do anything. In fact, as you can see very clearly, our focus and eyes are not on the share price. That's an outcome of what happens, and that's not our worry. That's something on which we have to think about, but that's not what we're driving on a daily basis. It's fundamentals of the business which we're focused on. And for me, I mean, for the year, we still have maybe high single-digit growth for 2018-19. And in fact, the signals are that with a bit of correction behind us that we have, we're going to have, we're going to continue now on our growth journey. This is not the new normal of, let's say, negative growth, certainly not. But who knows? I mean, we're talking about the future, right? This is not something that I can predict with certainty. The only thing I can predict is where we are putting in our efforts and what are the signals we're getting. And those are all, by and large, in the right domain.
Put a production target for FY19 at 9,25,000 units. Now, keeping the new numbers in mind, the way you're seeing sales growth going forward, are you going to scale that down? Are you going to stick to that target?
Well, it's not a target, it's more of a capacity availability. That's how we look at production. It's not a target. And production will always follow sales as far as Royal Enfield is concerned. In our philosophy, it's not that we produce X number of bikes and then we figure out a way of selling them. Our philosophy is that we figure out how many bikes are needed by the market and we produce those many. So sure, I mean, if it just depends on how many motorcycles are needed in the next quarter really, because the first 9 months are over. And I mean, I believe now we should start seeing growth again, good growth from Royal Enfield. And we've got, the channel is hankering for more motorcycles right now.
Okay, Eicher Motors sitting in the green today, up around 3%, but do remember it is still considerably off its 52-week high, around 40% off the 52-week high of around 32,000 that we had seen recently. As far as the market is concerned, we have just moved into the green. So let's talk about a CNBC exclusive then. Emerging market guru Mark Mobius of Mobius Capital Partners says that the tussle between the government and the RBI spooked the foreign investors, adds that Prime Minister Modi's decision on farm loan waivers is keenly watched. Take a look at that.
As you know, Congress Party has come out and said, look, we're going to give away to the farmers their loans. In other words, we're going to cancel all their loans. This is a lot of money for the states and for the central government. Sure. And, of course, that throws the whole budget out of balance. And now we're holding our breath to find out what Modi is going to do, because, if you want to get elected, you got to give something to the farmers. Right. So if this battle and this trade-off continues, it's not going to be very good for the budget. It did spook foreign investors because they are always concerned about central bank independence. It doesn't spook me. I don't think this is a big deal. In fact, it's pretty well known that the Federal Reserve, the central bank in India, has a lot of cash, maybe too much than what they need. And some of that could be given back to the government. I think that's what Modi is trying to do. There are some very good opportunities, particularly in the non-banking financial sector, because that's really been bombed out. And some of these companies will survive and grow, so we want to look at those carefully.
All right, stable on the markets. In fact, a slight bit of gain seen in the last 15 minutes of trade or so. Axis Bank in particular is also rising again in trade today.
It is powering ahead with a gain of around 40 points, and that has been led by SBI, which is moving higher. And IndusInd Bank, that reports numbers tomorrow, is also seeing some gain. But talking about the financial space, Bandhan Bank and Group Finance fall in trade after Bandhan Bank announces the acquisition of Group Finance through a share swap deal. Both the managements do see this as a positive merger with the synergies coming in through. Nisha was the first one to break this story, will give us the details. Nisha, what does this mean in terms of the numbers and what are the brokerages and experts on the street saying?
Thanks for that, Anisha. Of course, this is a large transaction where about an $11 billion company has been created, and this is going to be the largest lender franchise in the semi-urban as well as the rural area. So Bandhan Bank as well as Group Finance merger, that actually reduces what Bandhan Bank was looking at as a promoter stake and to take a step forward in meeting the RBI's guidelines. So that's an important reason why this particular transaction really took place. But here again, I would say that given the swap ratio of 568 is to 1,000 shares, well, HDFC stands to benefit a lot. It owns 58% stake in Group Finance, and it then reduces in the merged entity to about 15%. For which it will require an RBI permission. But what most of the brokerages are gung-ho about is the fact that it is now going to be easy to monetize this 13,000 crore rupees. In terms of the valuations, HDFC stands to gain here because it is over 13 times price to book for Group Finance at which the deal has been struck. It's a 2% premium to the 6 months trading average price of Group Finance as well. But is it expensive for Bandhan Bank? Well, that needs to be seen, because there are some complementarities as far as synergies between the banks are concerned. There is going to be also, remember, the diversification in terms of geography as well as lessens the concentration risk for the company. So we'll have to see how it goes forward. But I got a chance of quizzing both the managements, Deepak Parekh as well as CS Ghosh of Bandhan Bank, and hear out what they have to say about the rationale of this transaction.
The synergies between GRU and Bandhan are much, much greater than the synergies between HDFC and GRU. We both are concentrated in Western India. We have branches close to each other, and our average loans are coming down because of the government incentives. Earlier there was a gap. Now we are competing with GRU. You cannot compete with a subsidiary of yours where you have 58%. There is conflict of interest.
This is a big business opportunities, no? Geographically, concentration will be like to diversify. Secured, unsecured loan will be like to diversify. And both the resource persons and both the geography can be work each other areas. That will be the big opportunities for Bandhan Bank to future growth on this.
The valuation at which you have acquired Group Finance. Now, is that an expensive proposition for you? How will you defend this particular criticism?
You see that the shareholder also like to see that there is an opportunities, business growth. When the growth will come, automatically business and the shareholder, every people will be happy. Bandhan have the 51% year-on-year advance growth. Deposit growth 30% year-on-year. No. So Bandhan is the last 3 years showing that the path in here. So if you get the GRU, they are also to 23% growth year-on-year. When this 2 March will come, the growth will become on that level. So I hope that they will be happy on that, and their objective also fulfill on this.
Well, the markets continue to be volatile, but pharma stocks are in focus today. Ekta is here to tell us why Dr. Reddy's as well as Sun Pharma and a lot of other pharma stocks are buzzing in trade. Ekta, over to you.
Well, a lot of news which is taking place in the pharmaceutical space. Now, with regards to all of the generic companies such as Sun Pharma, as well as Torrent, Aurobindo, Cipla, all of them are seeing some amount of traction because there were positive comments which came in from the Teva head at the JPM conference. Remember, Teva is the largest manufacturer of generic drugs in the globe. And the Teva chief said that they expect a forecast of stabilization of prices in 2019. So they expect Q2, Q3, Q4. The total US generic market in absolute value will be stable. So that's important comments coming in considering the type of price pressure that the market has been facing in the past 2 to 3 years, though there was some stabilization last year. Separately, if you talk about Sun Pharma as well as Torrent and Aurobindo in particular, CLSA has come out with a note. They have a buy on Sun Pharma. They've lowered the target price, but they expect that Sun Pharma has improving fundamentals in US and it has a #1 rank in India as well. They expect Sun to reassess and take necessary steps to allay concerns when it comes to all of the governance issues which had cropped up. They like Torrent Pharma for its strong positioning in the chronic space in India, and they've upgraded Aurobindo to outperform from underperform with a revised target of 820. Separately, I just want to point out that Dr. Reddy's is in focus as well, as sources have told me that their SEZ unit in Vizag is getting inspected by the US FDA. It's a surprise inspection. It's a formulation plant, and the surprise inspection began yesterday itself. So interesting development there. Obviously, it could be a product-specific inspection or a current, general good manufacturing inspection which could be taking place. But obviously, that does come with some amount of trepidation in terms of a US inspection, especially when it's a price. But I think the comments coming in from the Teva chief has possibly assuaged some of those concerns.
Let's take it to a big development of the day. In a clear setback for the government, the Supreme Court has reinstated Alok Verma as the CBI director, setting aside, remember, the CVC's order, and also remember that Alok Verma and his deputy Rakesh Asthana had been asked to go on leave in October following a bitter feud between the two. Now, Ashmit Kumar, our colleague, was right there at the court and knows all that really transpired. Ashmit, what does it mean? What's the significance of this particular verdict?
Well, the #1 and #2 at India's premier investigating agencies fighting like Kilkenny cats, the term used by the Attorney General. Midnight orders passed by the CVC for removing both of them from active duty, and high drama here before the apex court. The Supreme Court today, by way of its judgment, looking to put an end to this crisis in India's premier investigating agency. What the apex court essentially has done is that it has held that the legislative intent to shield the CBI director from external influences is quite clear, that the CBI director should be a role model of independence and integrity, and if there were any provisions, if there was any legislative intent to tweak the term of the CBI director, there would have been very clear provisions to that effect. And with this observation, the apex court reinstating Alok Verma back as the CBI director and setting aside the 23rd October midnight CVC order. Having said that, what the apex court has also done is that it has slipped in two important caveats. #1, the apex court has directed the selection panel consisting of the Prime Minister, the Leader of Opposition as well as the CJI to reconvene and deliberate upon the matter within a week's time. So that's something that they will be sitting together and they will be looking at this matter. The second important caveat is that up until the deliberations of the selection panel are concluded, no major policy decision can be taken by Alok Verma, even though he has been reinstated. Now, there are a few questions that remain to be answered. #1 question is, the Supreme Court has remained silent on the extension of the tenure of Alok Verma to account for the process and the time spent in litigation. The second key question is, will the selection panel look at the CVC report that had been submitted before the apex court, which appeared to be a mixed bag? And the third question is, will the selection panel go ahead and look for a new candidate as far as the CBI director itself is concerned? So a number of questions that need answers, but as of right now, the apex court bringing in some clarity, ensuring that the office of the CBI director is protected, is shielded to ensure independence, reinstating him with the caveat that there can be no major policy decisions up until the selection panel decides.
Well, yes, Ashmit, quite a few questions remaining unanswered there, but the finance minister also spoke on the matter. Hear him out as well.
The court apparently has strengthened the immunity given to the CBI director in the larger interest of a fair and impartial functioning of the CBI. At the same time, the court has devised an accountability mechanism. In accordance with the directions of the court, obviously they will be complied with, and the government would act in the same manner.
All right, so that's the word coming in from the finance minister on this issue, but also hear out another expert opinion. Senior advocate Sanjay Hegde, he also spoke on this matter.
Today's verdict is a victory for institutional integrity. Each institution that is independent according to the constitution and the law in this country has been defended. If the court had insulated the CBI against, and the CBI director against interference, trying to subvert that decision of the Supreme Court in the Vineet Narayan's case by sending the CBI director on leave was simply not on. The Supreme Court today has reiterated the importance and the independence of the CBI director's office. I do not see it solely as a victory for Mr. Alok Verma, who will be reinstated, but I see it as a victory for the independence of investigative agencies in this country.
Moving on then, as 2019 polls draw closer, the Modi government faces the anger of almost 20 crore workers from formal as well as informal sectors who are on a 2-day nationwide bandh. Now, the strike has been called by as many as 10 central trade unions against the central government's alleged anti-worker policies and unilateral labour reforms. Now, Orissa Chief Minister Naveen Patnaik with his BJP party workers have organized a sit-in in front of the Talkotra Stadium to protest against the festering rural distress. Meanwhile, clashes were reported in Asansol in West Bengal between the TMC and CPM workers. The disgruntled PSU bank employees that is, have also joined the protest with All India Bank Employees Association and Indian Banks Association, voicing their frustration against the government.
All right, in the run-up to our annual India Business Leader Award, well, India's banking sector has been struggling with the burden of ballooning bad loans, resulting in the imposition of strict restrictions that have really made growth a valuable commodity for the sector. But one bank, and a relatively new one at that, has really managed to largely escape these harrowing experiences. Well, CNBC TV 18's Ritu Singh tells us why IndusInd Bank is in the running for the CNBC TV 18's India Business Leader Award as the Outstanding Company of the Year.
Of the 10 banks that were given a license in the early 90s, only half have survived. But even those have had to depend on the backing of established institutions. IndusInd Bank, in stark contrast, has not. This bank has not only survived over the years, but thrived. With over 1,400 branches and 2,300 ATMs spread across the country and a global presence through offices in London, Dubai and Abu Dhabi. Since the start of its operations in 1994, the bank has grown on all fronts. Its loan book, for instance, has grown to 1,63,000 crore rupees, registering a jump of over 32% over the previous year. Its strategy over the last decade or so of focusing on corporate sector lending but steering clear of riskier sectors like roads, infrastructure and power generation has helped. That's a large reason for its gross bad loans being contained at around 1% and net NPAs coming in below 0.5%. Even in the auto loan space, despite carrying the legacy of Ashok Leyland Finance, which it absorbed in 2003, IndusInd Bank has kept its focus on the lower risk segments like commercial vehicles, tractors and equipment financing. And so, while many of its peers grapple with slowing growth and weak balance sheets, IndusInd Bank is well poised to accelerate its growth rate, making it one of the contenders for the crown of the Outstanding Company of the Year at the CNBC TV 18 India Business Leader Awards 2018.